right, good evening. This is Live Market Observation, Volume 42. Yep. As you make your way on, be sure to like and share the video. If you're tuning in from Facebook, follow the TeamAlliance Facebook page. Turn on the bell. If you're tuning in from YouTube, subscribe to the channel and then turn on your bell notifications. If you're tuning in from Twitter, be sure to retweet. And from whatever platform you're on, make sure, again, that you like and share the video. All right, so we're going to get into some observation. I've actually been watching the markets throughout the day. For those of you new to NADEX, new to this content, what this video, this live stream is about is basically us observing the markets on this platform, which is called NADEX. NADEX is a very powerful trading platform where you can capitalize on what you understand about the movement of the market and kind of cash in on that information, or on that knowledge, I should say. Basically, if you understand how to interpret the movement in the market, you can apply that information to a very specific instrument that NADEX makes available, which is called a binary option. This is the best trading instrument in existence, in my opinion. Reason I say that is because the instrument is very simple to trade. The challenge is actually understanding and knowing when to actually place a trade. Not when to get into the trade, but when does it make sense to be in a trade at all? This is where market know-how comes into the picture. So, as I mentioned at the very beginning, you can capitalize on your knowledge of the market here with these instruments. In fact, these instruments make it very easy for you to do so. So what you learn when you tune in here is not how to trade. You're learning how to observe the market and understand what you're looking at. And there's a great distinction between those two things. Anyone can trade. So you're not here to learn how to do that. Many of you have already traded before you ran into TeamAlliance. Learning how to trade, that's not something that you're really going to learn from me, because the basics of trading is simple, especially with these instruments here. When you go to NADEX, it explains how the instrument works. It's very simple. The binary is just simply a price level in the market, and the market moves. The price level of the option is like a line in the sand. If the market ends below that line and you're selling, you would win or collect a profit on your trade. If the market ends above that strike price or that line, and you're buying, you would also win. However, if you're wrong, meaning that if you sold and the price goes above the line, when the clock runs out, you'll lose. And vice versa. If you bought and the price goes below the line or ends below the line, you would lose that trade. So, as you probably are very well aware, the market moves. It goes up, it goes down. It moves up and down within a short time frame. So, for example, we're looking at 1 minute time periods. That's what these candles on the chart represent. 1 minute time frames. 1 minute at a time. And in 1 minute, if there's a lot of market activity going on, the market can be all over the place in that 60-second period. Question is, do you understand that movement? Do you understand what it means? And can you use that movement in the market to place a trade where you'll know the outcome of the movement? I'll give you a good example. What we're looking at right now is a perfect example. If we just look at this candle here, where my mouse is, just now, right before the minute where we are now, so about a minute ago, that's what this candle represents. During that minute, the market went from opening at 8.1 and it went as low as 7.4. That is 7 micropips or seven units of movement. A micropip is a unit of movement. That's how we measure the movement. So the market moved down by 7, and then when it ended, it came back up. It opened at 8.1, went to 7.4, and it ended at 8.0. And that's why you see the wick on the bottom of the candle, because that little skinny line is showing you where the price went to. It didn't stay down there, though. It came back up, and it ended up here. And that's what resulted in the candle looking the way that it does. So the market can move like that within 60 seconds, and it can do that at any time. You have to observe the market long enough to know when that type of behavior is present, and then when that type of behavior is not present. So observation of the market itself is how you interpret what you're looking at. Because when I see this type of movement, I know that that is instability present in the market. It's not stable. How could it be if it moved down and then when it ended, it came back up? Does that sound stable? No. So you know that that type of movement does not represent stable. It represents unstable. And if it represents unstable, why would you want to be in a trade while the market is unstable? You see how I'm simplifying all of this? Like, I'm giving you logical questions to ask. Because if you're not being groomed this way to actually learn that the market is what you need to understand and not your trading method or your system or your strategy, that's not important. I mean, of course, it has something to do with how you enter trades. But instead of worrying about how to enter the trade, you need to understand why. Why should you enter the trade now? See, the question is, well, how is the market moving? Because that will answer the question as to if you should or should not, versus whether your trade's set up or not. You see the difference? So this is what we do here. We actually take time to observe the market. That's what this green box represents. This is one of the tools that we use in our observation. This helps us to isolate the movement. We can actually see how the market is moving And we also know that the market is staying inside the confines of two separate strike prices, just with this one box. The bottom of the box represents a lower strike price, which is this one down here. And then the top of the box represents a higher strike price, which is this one up here. So if the market movement, meaning the candles, are all contained inside of the box, it means that the market has been moving within the two strike prices, the high strike price and the lower one. Now, why is that important? Well, the less that the market moves, the better, because eventually you'll be able to utilize the stability that will come in the movement and then apply it utilizing the tools that we use. So the box being one of them. If you see that market activity is remaining in the box, that's saying two things. One, the market is staying above this line because it's in the box, meaning it's above the lower line or the bottom of the box. And at the same time, it's staying below the top of the box or the high line. That's a lot of information. You see, that's a lot of information. And that's why we use that information, because it's part of our process. When you combine that information with the actual behavior of the market, the actual size of the moves, like, what do I mean by that? Well, look at the candles. See, these blue and red candles represent the size of the moves in each 60-second period. Bigger candles mean that there is more movement. Smaller candles means that there's less movement. So whichever size is dominating the market, that's letting you know what's actually happening at the time. And if there are bigger candles that are dominating, it means that there's more room for the market to exhibit instability because the market is moving more. There's more distance of the actual moves because the candles are bigger. So you see how this makes sense? If there's more movement, there's more room for instability. You see? If there's less movement, there's less room for instability. It's all binary, literally. It's either more or it's less, right? It's either stable or it's unstable. Now, of course, there are degrees of stable, just like there are degrees of unstable. But the bottom line is that you need to be able to interpret them. The better at interpretation that you become, the more you can effectively apply the information when you are on the actual platform. Because you'll know, nope, not right now, it's not a good time to trade. So even if a trade were to set up, now's not the time. You see? And all of this ultimately leads to professional trading. And that's what it is that we are here to develop. Professional level trading. Because professionals basically take a process that they repeat over and over again to achieve the same outcome. And that's why professional trading for us means so much, because that's what we're doing. We want our process to be the same so that the outcome of the trades that we end up in is the same. Well, what outcome are we looking for? Winners. Period. Winning trades. Why? Well, winning trades is how you earn profit. Profit is how you earn money as a trader. It's kind of simple. Very simple, in fact. So when you put all of these pieces together it starts to make more and more sense, and you start to understand for yourself why we do what we do. It's very interesting. I want to I'm going to be doing a couple of things. I'm actually going to be kind of drawing stuff on the chart. And if the market does certain things, I'm going to ask questions. I'm going to ask questions, and I want to actually get into a couple of things that I've been paying attention to during observation. All right. So yeah, basically overall, and let me just hold this box up for a second. So we got 30 seconds left on here. All right. Do y'all see where the price is right now? You see where it's at? 084. You see it's 20 seconds left. Now, the market is going to stay inside of this box. So that means that where you see where it says close, you see that? And there's what, 5 seconds left? So it's at 8.5. So this is going to stay in the box. All right. All right. Now, I just wanted to kind of draw your attention to that. Now, I also drew a circle over this candle here, and I'm going to get to that in a moment. I don't want to talk about that just yet, but I want to point out a couple of things that I've been paying attention to during observation that I'm pretty sure it will be helpful once you actually understand not only what it means, but what it means relative to what we do already. But like I said, I'll get to it. I'm not talking about it yet. All right, so using the information from the market itself, that's all of the information that you need in order to end up in trades that will be profitable. So the reason that this platform is so powerful, well, it's actually more than one reason. So I should say some of the reasons. A few of the reasons why this platform is powerful. One, when you make a deposit here to trade, your money is in a segregated account that's separate from where NADEX, where they do their business as far as their actual business accounts. They have a separate customer fund. So every time that we deposit money onto this platform, your money is there so that when you trade, your winnings will be there. Because remember, this is binaries that we're trading. So for every trade that you end up being in, the only reason that there is a trade is because there's someone on the other side of the trade to take the opposite side of what you're doing. You see? So NADEX is an exchange, meaning that if I'm buying, there's someone on the other side selling, and whatever price I'm willing to buy at, they're willing to sell at. So I'm either going to get, if I place a limit order, for example, I'm either going to get whatever my limit price is or a better price. It's possible I could get a better price, but I'm not going to get a worse price. The worst price I'll get is the limit price that I set. So when you trade here, because they segregate the customer's funds, when you win, you get paid. The same way that if you lose a trade, the money is deducted from your account because you put that money at risk. And if you lose, then that money will go and be distributed to whoever won on the other side. So if you're right about what the market does when the clock runs out, that's how you win. If you're wrong, that's how you lose. You see how simple it is? So you really need to take time to understand the market movement. If you do that, then you'll have the edge over other people that are trading on the platform. All right, yo, hold on a second. Let me see something. Let me put this right here for a minute. I hate this thing. I'm trying to move this. Thank you. Put this right here. Where did this close? 7-3. And it opened 7-2. All right, so nope, that ain't it. Let me move this out the way. Just forget it. Let me delete it. Delete, not duplicate. All right. No, I'm not going to use that example. All right, let me continue to wait then. Yeah, there's something I want to point out, but I need the market to actually do it for me to show you guys. So basically, when you win, that means that whoever traded against you, they're going to give you the money that they risked on the trade. So whatever money they put at risk on the trade, you'll collect that when you win your trade. And the reason that I'm bringing this up in particular is because NADEX, being the platform that it is as an exchange, it gives you the confidence to scale up the size of your trades. So you don't have to be limited to smaller size trades. You actually can increase the size of your trades because there are a lot of people who trade on this platform, and there's a lot of trades and orders that are available on both sides of the market. Plenty of people out there trade the opposite way that we do on NADEX. Plenty. As a matter of fact, there's way more people who don't trade the way we do. So there's plenty of trades, or I should say, there's plenty of contracts available when we trade. So, this has been something that people have always asked me about, because they're like, well, when you grow your account, when you get to bigger contracts, will you get filled on your trade? And the answer is yes. You'll get filled on your trades. Absolutely. Just like with anything else, you may not necessarily always get filled because there may not always be available orders at the time that you trade. But for the most part, yes, you get filled. You get filled. If there are orders out there, they will fill your trade. Absolutely. And what does that mean? It means that, once again, when you are correct and you win your trades, you collect that profit. So as your contract size increases and your contracts get bigger, what's happening now is you're scaling up your income, because with the same initial deposit that you made, and when you open an account, the initial deposit, the minimum is $250. But what we do is we open the account with the $250, and then I tell you to withdraw $150 of that and leave $100 in the account. Why do I tell you to do that? So that you can start with one contract, and you'll be able to see the power of the platform starting from the bottom. By consistently winning, that same $100 that you started with, it will compound and grow exponentially after each trade. After each successful winning trade, your account will continue to grow, 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 grow. Contracts get bigger. Like, we have an entire spreadsheet in Project Freedom, which is the project that I created that shows you exactly what contract size to increase to based on your account size. So as your account grows and gets bigger, you're increasing your contract size at the same time. And I think I could do it here. Let me see something. Yeah, I could do it here. All right. I'm going to point something out. Wait, no, it didn't do it. Jeez. Let me see. Yeah, it didn't do it. It's sitting right on the strike. All right, so never mind. So as you increase your contract size, the amount of money that you profit increases. And so that's how within a very small number of trades, you'll increase the size of your account over time and over consistency. So by being consistent and just winning your trades one after the other, you're putting yourself in position to scale up the account, and you're putting yourself in position to earn at a high level. You see, which is why the project is called Project Freedom, because by the time you complete the project, the position that you're in is financial freedom. Period. The size of your trades when you profit will be substantial just by completing the project. And what happens, for the most part with people is they look at, oh man, it's only 30 trades. And they're thinking that they can just kind of, run through that fast. But this is not about being fast. This is about being consistent. This is about being consistent. So as you just remain consistent, you slowly take your time to get in position. And then once you're there, you remain in position, and your income will reflect the position that you have achieved. Like just being at a high contract level demands high income. On one trade, you making in excess of 5K on a trade when you're in position. For the majority of people, $5,000 a month is what their bills are. And you're putting yourself in position to earn that on one trade. So one trade pays your bills for the month. So you can kind of understand why it's so important for you to take your time when you're learning this skill, or I should say this skill set, because this is where you plan on being. It's not like this is, oh, let me hurry up and do it before I can't do it no more. No. What you need to do is focus and take your time and get to the point where you're executing the process efficiently so that your results are also efficient and consistent. You see, like you're not worrying about things. You're not hoping that things happen when you're even in the market. You've taken the time, you've trained, you've worked on your mindset, you've elevated. You have put in the time and the work for you to elevate to the point where you execute the process. Because that's what this is. This is not some strategy that just works for everybody. See, like that's the problem that most people have. They think that, oh, well, a good strategy should work for everyone. No. The nature of a strategy don't work for anyone. It doesn't work for anyone. Because even when it's working, there's going to come a point where it won't work and you won't know why it don't work. And that's a problem. That's a problem right there. If you're using something and you don't know why it didn't work, you got a problem. All right, let me see something. Let me see if the market does this now. All right, it might do it now. Let me put this here. Oh, this is terrible. This gets on my nerves right here. Stupid. Let me just isolate this. So I wanted to put this here. And the market is doing exactly what I knew it would do. Am I psychic? No. But I understand the movement of the market. All right, so I'm gonna talk about these things here momentarily. So it did it here, but this is actually a better example of what I wanted to mention. This here is an early indication of what you see the market doing now. And basically it has to do with the timing of not even the timing. That's not the right word to use. It has to do with the time that the market moved in and then where the market positioned itself. But I'm gonna see if I can get another example before I go into it. But this is gonna be something interesting because this is something that I just noticed. And it's funny too because I've always used it, but I never knew that I was actually doing it. But I discovered that I was actually doing this, and I discovered that we actually do this. So it's just something that it's not even a tool or anything like that. It's just something that I noticed that I'm going to share with y'all. But so the point that I'm making with um what the market does is that the market has behavior, and the behavior dictates where the market goes and then what it does when it gets to that point. Behavior also dictates how it moves. Behavior also will dictate the position that it moves to and whether it remains there or not. You see? So behavior has to do with everything that I just mentioned in the market. And this is why observation is so powerful for us, because when you observe, what are you observing? You see, that's the key. Most of the time when people look at charts, they're looking at charts, they got a bunch of indicators thrown on the chart, and they're trying to find trends, and they're drawing lines and drawing all type of stuff on the chart. We don't have nothing on the chart except a box, like literally. There's a box on the chart, and then everything that we apply in the market, we apply from the actual protocol and the process that we use, which is in your head because you train. So you're literally applying a process that you're just learning repeatedly over and over again in the market. And the key to it is observation. That's the key. See, like being able to see what the market is doing and how it's moving. That's the key to everything right there. Once you understand that, everything else starts to make way more sense. It just does. It just does. Let me duplicate this. I'm see. So I'm going to see if the market does this again. Is this it? Yeah. Let me see something. Yep. All right. So I mean, like you see what I'm doing right now. I'm literally sitting here looking. I'm just watching. This is called observation. And you need to understand not only what the market is doing, but why. Like right now, I'm looking at the market and I see what it's doing. And I understand why too. Now, you see that? Now you see how towards the end there was movement. See, so I can take this now and I'm not going to use this because of the fact that it did that at the end. And don't think that this has anything to do with entering a trade because it doesn't. This is just there to identify the time that the market is doing something during. And then that ultimately leads to what the market will continue to do. So really that's what the market does. The market basically moves in a series of continuation of what it's already doing, if that makes sense. This is exactly why we deal with dominance, because dominance means that the market's doing it already. For example, if big candles are dominating, that means the market is already doing that. See? Question is, do you know that big candles are dominating? Because what you're thinking could be big candles dominating might be a big candle moving in a smaller candle dominating environment. And it also could be vice versa. Sometimes you can see smaller candles in a big candle dominated environment. You need to know the difference. Sometimes you can see the market in the transition, meaning it's shifting from one to the other. It could be shifting from a bigger candle dominant environment to a smaller one. Again, observation and knowing and understanding what you're looking at. Key. The key to it all. What's funny is that this thing, it did it anyway. But I still want a better looking one. I'm still gonna just wait. I'm gonna wait before I talk about it. All right, so let me come over to the comments for a minute. Oh shit. Wow. Oh shit. Look at Maui Jeff. Maui Jeff starts off shooting at me. Oh shit. Oh man. Y'all are funny. He said, hopefully it don't take 10 weeks. Oh shit. That's funny. That's funny. You know what? Just for that, now I ain't saying shit. How about that? Yeah. You can thank Maui Jeff now. He fucked it all up. Oh shit. That's funny. No, I'm just messing with y'all. That is funny. He said 10 weeks. Damn. Damn, Jeff. Yeah, JT. Look at Shiny getting at me now. Oh shit. Wow. That's funny. Oh shit. Look at Angel getting some too. Oh snap. All right. All right, you got, you know what? You got one more time. I dare one of y'all to say something else. I dare you. Watch what I do. You want to play rough? Okay. Oh shit, that's funny. They getting at me. The market is doing too much. Damn. All right, it's doing too much. Thought it might have ended up doing it over here, but nope. The only thing that's still going on is the market's just still in the box, but you can see that the movement has increased in the past few minutes. Um, look at Chess. Chess like, you better chill out. You better chill before he do a walk off. Oh shit. Nah, I wouldn't do that to y'all. I would do that, but no, I'm not gonna do that. All right. All right. Maybe I can just talk about it. I wanted to see it again before I actually spoke on it. But this was the one actually that looked the best, I guess, but it's still not the best one that it could be. But it is getting you closer to understanding how movement stabilizes. Basically, every tool that we use is a perspective of seeing stability. Oh, excuse me. Damn. Stability manifests on the platform. All perspectives that we use. So, like when I did layers of stability training, um, that was powerful because it just gave identity to the stuff that we do already at an elevated level. Like layers of stability was basically 301 again with the way that we look at the market now, which is not different, it's just elevated. So we're not even doing anything different. We're doing the same thing. Even what I'm going to show you and what I'm going to talk about, it's the same thing that we already do. All it is something that you can use to notice what the market is getting prepared to do. You'll be able to single out behavior with even more efficiency. So put it like this. We know that range is the first indication of stability, right? And we know how to identify that we're in a range. Now, currently, we're not in the range. We're just not there yet. Let's look at some of the smaller candles that we have had on the chart. So I'll just use the candles in the box, right? So let's look at some of these candles. This one was 6. This one is 7. This one is 5. This one is 3, 2, 4. Yeah, 3, 3. So you have some smaller ones here. But for the most part, if you look at this, 6, 7, this one was 5, and then you had this one smaller, 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 smaller. So you had starting with the 5, which was this one, and I don't even want to use that one because that's 5. I'd rather use 4 or less. So anything that was less than 4 was here. It was 1, 2, 3, 4, 5, 6, 7. So 7 candles were less than 4 in this area here. But these candles were all 5 or more, right? All of these, 5 or more. These clearly are larger candles. And if you go back, you can see even these are larger candles. All of this is larger candle activity. So the first time that you saw smaller candle activity was here. So this is the first time that you saw any indication of range right here. This. Now, when you saw the big candle start to come back, what is this telling us? When the big candles came back again, the big candles were already here from back here. So this is the market coming back to what it was doing already. The dominant candles are large. This is bigger candles. So this is large candle dominance. So when we saw the smaller candles here, we know that this is letting us know that the market is transitioning, potentially, right? And it was confirmed by the fact that these big candles came back and they just kind of stayed big, and the market now is starting to gradually, not be as big as far as the candles go, but you still got bigger candles. You don't have a range yet. So if you don't have a range yet, there's absolutely nothing to do yet, period. Now, the reason that I pointed this out, where these circles are, all the circles represent are the candle right before the last candle. That's it. That's the only reason I put them there. They are the candle before the last one. So what I call it is the third candle. The reason I'm saying that is because if you look at the candle, like this one was at 1033. In a binary, there's 5 candles. The first one is the 0 candle. Then you got 1, 2, 3, and 4. So the last candle ends in 4 or it ends in 9, right? The candle before that ends in 3. So the last candle ends in 4. The one before that will end in 3. So when I say third candle, I'm talking about the one before the last candle. This one, 1033. Here again, 1048. That's the same candle because 1049 would be the last one. You following me? Let me keep going forward because it might actually do it again over here. So like this is 7. So 8 is the next one. The next candle will be 8. That's the third candle because the 9 candle was the last candle. So 8 is the one before 9. That's going to be the third candle. So anytime you hear me say third candle, that's what I'm referring to. So anyway, the only reason that I'm bringing up the third candle is because one of the things that you'll start to see is that when the market is moving in a way where the movement leads to a position inside of the box. Like for example, you see how right now the market is in the box? See how the candles are in the box? I'm gonna put this here just so you can see. So this is the third candle I'm isolating. You see, it's the one before the last. That's why we got 20 seconds left for this candle. Now, this candle is going to close inside of this box. Okay? There's 10 seconds left. You see? Now, closing the box. This candle is also going to stay in the box, which is the last candle. And I know that because of the behavior that's present. And not only that, I know that because of what the market is doing inside of the box. So anytime that you see the third candle close inside of the box, the last candle is going to close on the box too. See, now I'm not reluctant to say that, but I don't like saying stuff like that because people will take that and then try to trade just off that. Don't do that. I'm not pointing this out because this is a way to trade now. I'm pointing it out because you already see this. You see the market doing this already. Let me go back. So like over here, for example, this was the third candle. And at the time, the box was over here. Now, because of the existing movement inside of the box, this candle closed in the box. What did the last candle do? Where did it close? Closed in the box. Now, mind you, if you look at the movement is not fully stable. You got a wick on the bottom of this one. You got a wick on the top of that one. But again, the activity is inside of the box. So when you see one layer of stability, this right here just helps you to understand why. So when you look and you see like, damn, I wonder why that one stayed in the box, even with all of that movement. So in other words, you'll see movement in the market, but because of the position of where the market ends up at, because of the activity that it is doing at the time, because one layer of stability is there, you'll see that this will manifest. It'll just happen. Now, it doesn't mean that there's anything to do, but my point is that just knowing that helps you to have more clarity on what goes on prior to you applying the process and understanding why the market is doing what it's doing at the time. Because there have been times when people have seen the market set up and it looked like a trade set up, and then the trade sets up, but then the market moves all the way on the other side of the strike. And you're sitting there wondering, damn, why did it do that? See, because you don't understand position change, and then you also don't understand when the smaller candles are not dominant yet. Now, what I'm making reference to with this is for when the smaller candles are either dominant or they are transitioning. So what I just said only applies when the market has smaller candles either dominant already, or the market is transitioning into the smaller candles becoming dominant. So you actually can use it as an earlier or another early indication. The same way range is the first indication. You can use this as another indication of how the market is transitioning. Because if the market activity is in the box, when you see that third candle, and then the fourth one stays in the box, and you're like, damn, man, I wonder why. I wonder why that did that. Well, the reason that it did it is because the market is either in transition or the market's already there. So now you are in position to ask yourself that question. Which one is it? Is the market in transition, or is it actually already there with the smaller candle dominance? You understand what I'm saying? So again, it's just a tool. Like the tools I give you are very powerful. This is powerful. What I'm telling you right now. Let's do another one. Use another example. What candle is this? All right, this the third candle here. Right now look at where it is. It's at 6-8, right? 6-8 is in the box. Now watch what the last candle does here. Just watch. So this is the third candle, right? And this is the fourth candle. And I'm gonna keep this on the open, high, low, close so you can see the information in the box. You see where it says close? Look at that number. Just keep watching. Ten seconds. Where did it close? What number did it close? Y'all type it. Type the number. Type the number that it closed at just now. There you go. 6-8. Closed at 6-8. Why? Why? Look how just look at that. 8 is only what? 2? Is it 2? Yeah. 2 micro, well, yeah. Yeah, it's 2 micro pips away from the strike. But you include the strike for a sell, so it's kind of 3. But we'll just say 2. It's 2 micro pips away from the strike. Why would that stay there? Tell me that. Why? And I want to see, the reason I'm asking is because I want to hear what you guys think about it. Why would it stay there? Carrie, I'm calling it the third candle because the fourth candle was the last candle. And it just helps you to remember easily. When you look at, so like for example, just now, what time did the candle that we just closed on close? You see the time? 23:14. So 11:14. 4. It's the fourth candle. It was the fourth candle starting from 11 o'clock. Right? The fourth candle was the last candle. That's the last candle in the 5-minute period. Because 23:15 is the first candle, which is really the zero candle. So 23:15 is the zero candle. 16 would be the 1. 17 would be the 2. 18 would be the 3. And then 19 would be the 4. And I'm doing that. I'm not trying to confuse you. I'm actually trying to help you remember. Because in your head, when you look at it, you're like, all right, yeah, that's the fourth candle. Because it ends in 4. Right. This would be the third candle. It ends in 3. So it's just an easier way to remember. That's why I'm calling the third candle. So hopefully that answers that question. But that was a good question. Jamal says because the range is dominant. Maui Jeff, quiet energy is coming into the market. If it continues to transition with the same behavior, it starts to range and so on. Shani says, conditions slowing, stability present, but still a DQ, but stable recognition, sharpened skill. Yes, it does. And that's all we do continuously. We look for more reasons to have confidence in the stability present in the market. Jamal says quiet energy is already there, and I agree. It is now. See, all right. So let me go back. Let's just recap a little bit. So remember that this back here was the first time that we saw the smaller candles come in. Then we had the bigger candles come back, right? Bigger candles came back, and you had a bunch of those. We know that was because bigger candles were already present. But now after the bigger candles were done, what happened again? Smaller candles. So you have smaller candles again. So now that's one set of smaller candles here. Now you got another one here. Then you got a couple of big ones. Market repositioned itself here. Smaller candles again. And that's what you saw just now on that binary that we observed. So you saw the range come back after the position change here. Make sense? Same way that after the market came here, it repositioned just now. Repositioned back up here above the strike. That's where it is now. Look at the size of the candles again. They're small again. So this is how you see the transition take place. It started here. Started right here. And even before the smaller candle started here, I was already looking at the third candle from here. So I already saw that the third candle stayed in the box from back here. Then you had to move down. Next third candle stayed in the box again. All that's doing is letting me know. It's like a heads up. It's like, market is transitioning. Definitely. Because if that's happening, now when this happens, it makes more sense. Like, okay, this is definitely transitioning. So now I know that what this is going to do is going to set up whatever the next thing is going to be. What's the next thing that happened? The next thing that happened was another series of smaller candles here. You didn't just have the big candles remain. See, the big candles came back, but then the small candles came back again. Now these big candles mean something different. See, the big candles don't mean big candles anymore. Now the big candles mean position change. So look at how we just did all of that visually. We did all that visually. I'll take this one out because that was just super simple. But this one right here, this right here was the tell-all. See, just like when I asked you, well, why did this one stay in the box, being that close to the strike? Market is letting you know what behavior is there. See? So understanding that you have this behavior present gives you more confidence. So now your confidence level increases. And because your confidence level is there with what you're seeing, not with what you think is there, but with what you're actually seeing is there. Now, when the trade actually does come, guess what? That's going to be the trade that you're going to be in. This is good. JT said there were 2 layers present confirmed at that moment. Which moment? You talking about when I asked about the third candle? Shawty's funny. And see, remember that it's way more important and it's way more powerful that you understand why versus think trying to justify like taking a trade. That's not even the purpose of any of this. The purpose of this is knowing that you recognize behavior when you see it. It's like you have to be able to ask, what's the behavior? That has to be the question. Like, what is the behavior? You need to be able to say, all right, well, right now, smaller candle dominance. Oh, okay, you sure? Yeah, I'm sure because of this and this. See, like if you were able to break down that transition that took place, you would know that the smaller candles are dominating. And so now it means that the bigger candles mean something different. They don't just mean bigger candles with unstable behavior all over the chart. The smaller candles represent range. Range represents smaller moves. Oh, you don't know? You worse than me. You're like, oh, I forgot. You know what's funny about the third candle? The third candle is 130. Y'all do realize that, yes? What's the first part of the process in phase one? At what point do we start looking? At a minute and 30, right? Minute and 30 is the third candle. So am I even telling you anything that you don't know already? Think about it. See, like this is why I love to do this type of stuff because it seems like, oh, he got something new. Actually, I don't. It's actually not new. It's just a different, more elevated perspective of the same thing we've been doing the whole time. The third candle, all it is 130. It's the same candle. The third candle is when you start looking in phase one. Am I telling the truth? Mm-hmm. Yep. Sure enough. Kia says, because when smaller candles are dominant or the market is transitioning, you'll see that when the third candle closes in the box, the last candle will close in the box. Yes. And I was about to say, well said, but I think that's what I said, right? well reset. Yes. And it's just true. It is true. Just like here. This is the third candle here. This. Look at the time. 1:30. Minute 30. This is when you start looking, right? Just when your alarm goes off and you start looking at the chart, when you're doing the quick glance. So you kind of see what I'm pointing your attention to. I'm not doing this, so that you look here and you're like, let me see if there's a setup coming. That's not the purpose of this observation. So look at this. This closed at A7, right? Now, let's say that you apply parameters here. This is already disqualified. This is already a DQ. Is that 8-9? That's already disqualified. However, pay attention to this. This one closed in the box, and just look at what happens on this last candle right here. Just keep watching. Watch the movement. Mind you, this is at 8-9. This is literally 1 micro pip underneath the strike. And there's the move. See, so did you see how it paused first and then it popped and pushed through? This is why you don't just jump into trades, because when you're looking at this, you're making sense out of the movement. So in this example, and this is good, you see that the market ended in the box, but look at the position of the candle. Look at the position. It closed at 8-7. Started where? 8-4. So you have a blue candle, meaning that it was moving up towards the strike. So there's no entry, there's no trade or anything like that. But you still want to see what the actual movement is at the time. This here is just another position change. And that's why when this set up, even though it ended in the box, all this did was set up this position change to take place here on the last candle. So you can see this coincides with, even if you apply parameters, that you would be disqualified from even entering into that trade. So nothing to do. Again, it just help make sense out of what you're seeing, because you already saw even beforehand. All right, well, this is the way that this is positioned. This actually is moving towards a strike. It closed in the box, but that smaller candle behavior is not there. Then we know what this is going to end up being. What? A position change. And that's exactly what it did. It repositioned out this box and it came up here. See? So just making sense out of stuff is helping to keep you focused and on track. Because if you were looking just to trade, somebody could have looked at this and been like, oh, look at that. Market position underneath. Oh, it's in this box now down here. All right, let me enter this. And they could have just jumped into a short right here. Just jumped in. And if they'd have jumped in here, look what happened in the next one. You had another position change. It didn't make sense. But if somebody's in trade mode, people will do this type of stuff. But this is why we go through all of these different observations and we study, so that we understand what we're looking at and then what that means. All the time. This is good stuff. Right. And that's why I had to say it. Look at what Shawnee's saying. It's not a license for the thirsty. It's just observation. It's understanding what you're seeing. Kia, you are understanding. That is exactly why behavior is important. Phil Drake, does this behavior still happen when there's not a barrier. Which behavior, Phil, are you referring to? Shawnee, for purposes of the example that I gave and just me even mentioning the third candle, both of them, they're both important. The third candle means more when you have the existence of a range inside the box. It means a lot more. When you don't have a range yet, when you're looking at the third candle, that tells you a lot about transition. Okay, so does the third candle behavior still happen when there's not a barrier? Yeah, it does. But the only reason that it means anything to us is because that's letting us know that the market is potentially transitioning, because that would be the only reason why there would be continuation. In other words, the only reason that the fourth candle would stay in the box because the third candle stayed in the box is because the market is transitioning, or because the market is already stable, meaning that there are already layers of stability present. But you can, like, just by looking. I mean, like, just like this one, for example, when we looked at this, look at what's not there. We weren't looking at this for our RCB purposes. We wanted to see what the fourth candle would do in relation to the third one. So there's no RCB here at all, right? There's no RCB there. So if you don't have RCB, there ain't nothing to do anyway. But the reason that you're looking even to see what the third and the fourth candles are doing is because you want to see if the market is falling back in line. The fact that you had that position change back up again is letting you know, nope, it's not doing it here. See, it's not doing it right here. But now, when the market does settle back, look at what it's doing now. Now you got smaller candles back. Now you got the candles clustering. You see what's happening now? Only thing that you don't have, the market is not fully in position. It's a little too far away from the strike. And that's why you're seeing your pricing going out. But you don't even worry about that. You just observe. Because when the market does get into position, when you know what behavior is already present and what you already have, you'll know that that means something at the time. And that's how you interpret all of this information. And I wasn't even looking at this one. It did it again here. So this one, 1135, excuse me, 1133. So this one closed in the box. Fourth one closed in the box. It didn't do it here. This was position change. It did it here. This is letting you know it's transitioning back. What does it do? Smaller candles again. So you start to make sense. Like, all right, even though the market looks like this, you're making sense out of it though, because you're understanding what happened. You've been observing this entire time. You know what started happening from all the way back here. You know what all of this meant. All of this is explaining why this is doing this now. You see? Yes, this is it right here. Yep. That's it. That is it. See, now if I compare this and look at what it just did. And it's so funny because I'm in the middle of saying it. And the market is already doing it. What I was going to say is that if I compare this to the same behavior that happened here, you can have a position change take place again. That's exactly what I was going to say. And that's exactly what the market is doing. Exactly what the market is doing. And it's not even holding, and it's coming back. So just instability. Crazy. Crazy, man. So I know that it seems like it's a lot that I may make reference to and talk about, but it's really not a lot. It's really just constantly elevating the understanding of the few things that we actually do, because we don't do a lot. We don't do that much. Yes, and this is what, see, there you go. People get popped off the position changes. Exactly. Yep. They sure do. Position change behavior. The fourth candle carries looks best surrounded by tight bars before and after. Yes. Yes, because the more frequently that you're seeing it is more confirmation that the market is not just transitioning, but the market is there. See, like at this point, I could say safely that the market is still transitioning. You're looking for instances where it's indicating that I'm not transitioning no more. I'm just here. But you're still seeing small things happen. Small things that are big enough to let you know that you're still not quite there yet. So put it like this. If there was a trade that's set up at any point in time from all the way back here, from when we were noticing this, if any trade set up, it ain't a trade we would be in. It's not a trade we would be in. Not yet. But while we're waiting, understanding what we're looking at is important. Because you could put it like this: we need the behavior that we want to be there already before a trade comes. Hold on. So, are we all clear that that's what it is that we do? That's everything we do is for that. We want the right behavior to already be there before a trade comes for us. Not looking for a trade while the market's transitioning, right? We don't have clear indication that the market has all the layers present. You got one or two layers there, but you still trying to enter a trade. Not that. That's not what we're doing. We're using confirmations to let us know that the behavior is there or that the behavior is not there. So if we keep getting confirmations that the behavior is not there yet, there's nothing to do yet. So no trade that you even saw that could have set up is relevant, because you wouldn't have been in any trade yet. Period. That's it. That's it. This is good though. This is good. But yeah, so that third candle will help you guys. Make sure that you go back and you rewatch this. That's going to help. Trust me when I tell you, it's going to help you to make sense out of behavior and what's going on at the time. It will confirm that the market is either transitioning or it is stable already, in addition to everything else that we wait for. That's what it is. That's all it is. That is all it is. All right, man. It's 11:45. So we did an hour and a half. I'll probably do a coffee and charts tomorrow if I can. I'm kind of busy this week. It's my daughter's birthday week, so she's celebrating her birthday all week. So Pop's gonna be busy. All right, but if I can, I will come on. I will see you guys then. And I did plan on doing a podcast this week, but I don't know. I'll see what goes on. If I got the time to, I'll do it. All right, man. You know what it is. So this is volume 42. Yeah, live market observation. All right, I'll see y'all on the next one. Peace. Dom de Marco.